All right. So, gentlemen, yesterday we did great things. If you remember, the first lesson that we did, AFR lesson yesterday, we covered a couple of things. Is there anybody who is able to remind us what we covered yesterday? Something that you can't forget in AFR. As a quick way of recapping what we did, it's always important for us to connect previous sessions with what you're doing today. Very, very important. Is there anybody who is able to remember exactly what we did in our yesterday's class? If I may, I will share the course outline. We started with this topic number 6. Of course, I should have started topic number 1, but you know, at times as an experienced teacher, I know the topics that I should be able to start. I don't have to follow the topics the way they're given in the course outline, because I have to lay the foundation. And topic number 6 normally gives me the foundation for discussing these other topics, because it is the one that talks about conceptual framework. So topic number 6 is what we decided to work with. So yesterday we were able to do a few things. We were able, for example, here to do these global reporting initiatives, guidelines on sustainability reporting. So as a quick way of recapping, is there anybody who can remember any single concept about sustainability reporting? I told you, under sustainability reporting, you will always look at reporting from, or rather on, the context of what here 3 Ps. We talk of 3 Ps. So the first P that you must always report on, if the business is to be sustainable in the long run, is profit. Yes, you must report on profits. You must report on the planet. What are you doing in this case here to the environment? Very, very important, planet. And then, of course, you must report on people. Any company that is not strong on people, is not strong on its employees, cannot go very, very far. Is not strong on the surrounding community, cannot go very, very far. That is sustainability reporting, 3 Ps. From there, ladies and gentlemen, we went ahead and discussed what the examiner calls here integrated reporting. In a minute, if I'm told to summarize integrated reporting, ladies and gentlemen, I'll always remember to integrate is to put together. Here under integrated reporting, we use what we call the FESG framework. FESG framework. F is that you must report on your financials, very similar to sustainability. You must report on your financials. Then we have E is the environment. Then S is social, which is people. Social, that's people. And then G, as we saw in EABL's report, you must always report on your governance structures. That is what we call integrated reporting. Nevertheless, as I recap, I would want to see whether there are students who are able to remember the components of integrated reporting. I mean, I showed you some diagram. Is there anybody who is able to remember, like, I mean, ladies and gentlemen, this integrated reporting, the integrated report, which are the most important components of an integrated report? Most important components of an integrated report, are you able to remember them, even a single one? Let me just remind you one, as you guys, I'm so sure you guys are very bright students. I'm so sure you guys are typing something. You must always give us a section where you capture the business model. Business model. I must be able to tell, in this case, the whole world, in this well-bound document called IR integrated report, I must tell the whole world, how do we make money as RCM College? For example, as RCM College, we make money through trainings here. We get fees from students. So like EABL, if you remember very well, they were able to give us their business model by showing us what they called how they move from grain to glass. So that movement, the production processes like that. And then, of course, when they have it in glass like this, they're able to get their money. So business model, yes. All right. Ladies and gentlemen, you must have a whole section where you discuss the governance structures. Who are the members of your board of directors? Who is the CEO? So governance are like that. You must have a section where you discuss, Kihara, you must be a very good student, performance, the highlights, and then, of course, the whole performance in terms of financial statements. So we have, you must talk about the strategy, the plan of action here. You must give us your future outlook. Thank you very much. The future outlook. Because remember, this integrated report, you're using it to convince potential employees who will be able to come and work in your company. You're using it to convince, ladies and gentlemen, potential investors, and even reassure the ones that you have that, hey, it may not be that nice. It is a bumpy road, but the management is in control. And this is what we are thinking about the future. So the future outlook is very, very important. How comes nobody is remembering the concept of opportunities and what, risks? So, I mean, ladies and gentlemen, we normally, we have a gracious Lord. At the end of the day, every company, every individual, we've got so many opportunities. Opportunities that are bound. Like if it's RCM college, there are so many, we can expand and go into high school. So long as we are prudent in terms of how we manage our financial resources and we know how to do marketing, there is quite a lot you can do outside here. Na ile kujituma, kama hujui kujituma pia inakuwa ni problem hiyo. So opportunities and risk, and of course, as I've said, it's not going to be like a smooth ride. No, there must be risks here. And those risks, in this case, you must come and do what here? Explain to the entire world like that. I'm so happy because I can see you guys are able to remember great concepts there. Then we went ahead straight away and discussed something else called management commentary, management discussions and analysis. And I was able to tell you, ladies and gentlemen, there is no way in this modern era you can just tell us that, you know what, we are giving you financial statements only. That we take in this case the income statement. We take in this case the statement of financial position. We come and take the cash flows. We bind all of them together and then we say this is the financial report of RCM college, and then we take it to no. There must be a section where you as managers, because it is your primary responsibility to develop those financial statements, you'll have a whole section where you must do what we call management discussions and analysis. Like I was able to show you yesterday, where Matt Nodur was basically talking about the performance. He's the chairman of the board at EAPL, the performance of what here, EAPL in general. That fine, in 2022, for example, the macroeconomic factors were not very right. Because of a few things here and there, like for example, the consumer purchasing power was not that high. So in this case here, we were not able to sell so much. Our revenues went down. Nevertheless, we had also to squeeze in our costs. That is why, despite the revenue going down, still we had an increase in profits. And that is why we are here as shareholders smiling, because regardless of how tough the environment was, ladies and gentlemen, we shall have in this case an increase in dividends. The managers must be able to give us comments regarding the entire environment, future outlook as well. You're giving assurances to the existing and the potential what here investors, stroke customers, stroke employees, like that. So the management discussions, to expect 3 statements at the very least. The chairman's statement, the chairman's comments. Number 2, we need the CEO's comments. And then number 3, we need your comments as the CFO. Remember now here you are the CFOs. First of all, before you get to CEO, I would expect you guys to be CFOs. So the CFO must say, hey, these numbers, I'm the one who did them, understand them very well. And from the graphs, you can see this is happening, this is happening, this is not happening, but we shall fix things. So we have management commentaries. So ladies and gentlemen, if you normally write dates in your notes, so you have to write today's date. Today's date. It is 7th of May, 2024. And what are we going to study today? What do I have for you guys today? Great things. So today we want to finish this topic. That is our main goal. So we shall be able to look at the conceptual framework and the process of developing new accounting standards. I'm going to look at, although I'll cover 6.1 and 6.2 at the same, using the same handout, proposals to revise, update existing standards, and recommendations to issue new ones, the same. 6.3, I've already covered this. 6.4, I'm going to look at this great thing called Capital Markets Authority Corporate Governance Reporting Requirements. We have 6.5, Global Reporting Initiatives Guidelines on Sustainability Reporting. All right, this already we have done. So I'm going to look at Capital Markets Authority Corporate Governance Reporting Requirements. I'll be looking at, I've already done integrated. I'll be looking at the materiality guidelines for financial reporting. Then we have here legal and ethical issues. I've got very few things that I should be able to crash in an hour, and then I release you guys, you go to your workplaces. To help me do this is a handout, which I would want to share before I continue this handout. this handout. I would want to share it right now here in the comment section. Please get all our handouts, name them very well, and ensure that you are keeping them right. You should be able to keep them. You should be able to print them. Oh, it is 04 in Zambia. Wow, it's very good to have students from Zambia. I told you, I mean, these institutions have got very, very many opportunities. You can now see I have Gregory Mbanga from Zambia. But if I may ask Gregory, are you doing CPA Kenya or is it ACCA? Are you doing CPA Kenya? Because Zambia normally gets so many students from Zambia who do ACCA with me. And he's telling us it is 4 o'clock, so they are 1 hour behind. So in this case here, we have AFR. AFR, yeah, this one here. So colleagues already have been able to share, or we call it CA in Chartered Accountants in Zambia. Great, great. So I hope the syllabus is well aligned with what we have in CPA, of course, because we are using the same international financial reporting standards framework. But in case there are any issues, there could be few issues which are not exactly the same, fill out, or rather always reach out to me and we shall be able to address those small discrepancies. So have you been able to see what handout Mwalimu will be using today? I've already shared it there. Someone download it. If possible, someone share it with us in the WhatsApp group. In the WhatsApp group. And once you do that, you should be able to put thumbs up like this. Same Mwalimu have been able to download it and I've even shared it in the group. Because the ninjas here will not be able to get it directly here. The ninjas will not be able to get this directly. And you can't blame them. Perhaps they're using mobile phones. Perhaps some of them are on the way. You know, there could be somebody who is listening in to this class here and they're on the way going to work. So they may not be able to see so many things. So then I'm waiting to get your green light, your thumbs up like this. Great, thank you very much, Mary Ann. Mary Ann is a good ninja. Mary Ann is a good ninja. All right, ladies and gentlemen, this is what I want us to do today. Great things. And all these questions are in your past papers. So what I'm doing basically here is to help you understand. Oh, yesterday, yeah. Somebody should be Mary Ann. I officially appoint you the class rep. Whatever you get in the groups, whenever you see new students coming in, please always be resharing. Like yesterday, I gave some book. So I expect you, Mary Ann. Sorry for appointing you to a position that does not need, that will not be rewarded, at least here on earth. But remember, service to humankind is service to God. Is service to God. So always take care of these new students. So I was trying to make a point here that once you get this kind of training, at the end of the day, we have what we call learning management system. All right. This learning management system, each student needs an account. Some of you have already been able to get accounts, they can access the accounts in the learning management system. So the learning management system, I've done so many past paper questions that I would expect you guys to go and do what here, to go and listen to those past paper solutions in the LMS, because now here we are time bound. So we have here advanced financial reporting. Topic number 6, emerging issues in financial reporting is what we are looking at. All right. And as per our today's agenda, I'm going to look at the conceptual what here framework. Let me just increase the font size like that. All right. So the conceptual framework. In financial reporting, a conceptual framework, even before we read, ladies and gentlemen, basically is a point of reference for accountants. You see, for example, I told you, like most of these pastors, not most, but all these pastors, including in this case here, sheikhs in mosques, they must always refer, whenever they are coming up with their sermons, they must refer to the holy books, the Bible and the Quran. so that they can come up with their sermons for the day. This is what I'm going to preach. I'm going to preach about John. They must do research like that. So this conceptual framework is what the Bible is to the Christians here. It's a point of reference. So this conceptual framework, especially for those of you who will be able to rise to the CFO or senior accountants level, you will need to be having this conceptual framework. It's available online. You get it to print it, and you're going to be making reference to it. I mean, this will be what you shall be reading most of the times. You read it together with what are there, international accounting standards or international financial reporting, what is that? Standards. But conceptual framework has got its own unique advantages. It is so superior to the extent that even the IASB is the body that comes up with these financial reporting standards. IASB, it stands for International Accounting Standards Board. Even this IASB, as it comes up with the new standards, it must always make reference to the conceptual framework. Conceptual framework, ladies and gentlemen, is a detailed document, which will even be defining, like when you lost on terminologies in financial reporting, conceptual framework will go ahead even to tell you, for example, what an asset is, all right? We'll go ahead to tell you, to define for you what a liability is. Those basic definitions are always in the conceptual framework. So it is basically a document of reference. So an accountant, for example, I've gone to an IFRS, and then I realize in this case that this IFRS, I'm not understanding it. Always conceptual framework. I've gone in this case here to some meeting, a meeting where we have got many accountants. So we have, for example, like hedging, right? So we have a hedged asset. We're going to discuss what hedging is, IFRS 9, later on. So in this case here, we have two accountants here. We have a Halima Bunu, and then we have in this case a Gregory. So Halima Bunu does her computations. She says that this asset is the hedged asset is worth 10 million. And then we have Gregory, who goes ahead and tells us, no, this asset is supposed to be worth 6 million. So whenever we have accountants who are using IFRS here in terms of interpretations, they interpret the IFRS differently, because at times they could be very subjective. Then in this case here, the arbitration, the neutral person here should go to straight away the conceptual framework to be able to ensure that these two people are aligned. There are areas, ladies and gentlemen, which have not yet been covered by any IFRS. For example, right now we have the digital assets. We have these digital currencies, the Bitcoins. All right? I mean, there is no standard that has come in this case here point blank to talk about them. So in case there are gray areas in financial reporting, in accounting, which you as an accountant feel that at the end of the day, you need to have some figures or some disclosures on the same in these financial statements, and there are no standards at all, then you shall always go back to what here, to the conceptual framework, and try to understand, I mean, where do I place this particular item to be reported? So conceptual framework is such a huge concept for accountants. There is no way you will be able to go to these senior level interviews without mastering what we call the conceptual framework. So the conceptual framework, in financial reporting, a conceptual framework serves as a foundational structure, that guides the development and application of accounting standards. Look at this, that guides the development and application. How do we apply and application of accounting standards? It provides a coherent set of principles and concepts to ensure consistency, comparability, and transparency in financial reporting practices. The advantages of having a conceptual framework in the financial reporting include what are the key advantages of having this conceptual framework in FR? As we've said up there, clarity, clarify things, clarity and consistency. One of the primary advantages of a conceptual framework is that it promotes clarity and consistency in financial reporting standard. By establishing the fundamental concepts and the principles, it helps standard setters develop accounting standards that are logically coherent and internally what here? Consistent. Like if you go to whichever IFRS, ladies and gentlemen, if you go to any IFRS, you will see these guys having some order. Look at, for example, IFRS 16. Look at, for example, IFRS 2, share-based payments. If you read that standard, you will see, for example, initial recognition or initial measurement. How should you measure this particular asset initially? Then they come and tell you subsequent measurement. Now, for example, you have recognized this asset is worth 10 million. Then subsequently, what will you be doing? If it's an asset that is depreciated, so it's got depreciation. Subsequent measurement. And then they'll even go and have a section on the recognition. You sold this asset, or in this case, this asset is fully impaired, and you feel like I should recognize it from my balance sheet, from my statement of financial position. Then how do you recognize? It is that flow of the standards that leads to us to say that it is the conceptual framework that ensures that standards are organized like that. So you can easily compare even standards here. All right. We can easily compare standards. All right. Ladies and gentlemen, from there we have here guidance for standard setting. A conceptual framework provides guidance for standard setting bodies, such as the Financial Accounting Standards Board in the US and whatever, International Accounting Standards Board. Of course, ISB is what we use here globally. It helps these organizations in formulating new accounting standards and revising existing ones by providing a theoretical foundation and a criteria for evaluating proposed changes. The key thing that you should never forget, ladies and gentlemen, is that this conceptual framework is the basis upon which IASB makes financial reporting standards from. Then we have enhanced comparability. Consistent application of conceptual framework principles improves the comparability of financial statements across different entities and jurisdictions. When companies adhere to the same conceptual framework, users of financial statements can more easily compare the financial performance and the positions of various organizations. Ladies and gentlemen, when we have a conceptual framework, all accountants globally, regardless of the sector they are in, we shall have financial statements, we shall produce financial statements that are easily comparable. I mean, you're following the same conceptual framework. How do we recognize assets? How do we recognize them? How do we do subsequent measurement? That language now becomes clear to every accountant who has been able to, and you can now see, ladies and gentlemen, in this case here, I mean, the walls are coming down. Now we are having what we call a global village. Like now we have this student from Zambia. We are studying, in this case, the same content here. Courtesy of what here, these IFRSs, courtesy of what here, this conceptual what here framework. So then at the end of the day, ladies and gentlemen, this framework will ensure that there shall be consistency in reporting. Consistency in reporting. All right. So enhanced comparability. We have facilitation of interpretation. The conceptual framework aids users in interpreting financial information by providing a framework for understanding the underlying assumptions, principles, and the constraints used in preparing financial statements. This facilitates better decision-making by investors, creditors, and other stakeholders. Ladies and gentlemen, I told you. And in some cases, you'll get accountants ending up giving us two different figures. For purposes of interpreting everything here, we shall always go back to the conceptual framework as our fallback position. Adaptability to changing business environments. A well-designed conceptual framework is flexible and adaptable to evolving business practices and economic conditions. It allows for the development of accounting standards that can accommodate new transactions, industries, and business models while maintaining conceptual integrity. I told you, whenever you've got new things like these digital currencies, which we don't have an IFRS at the moment, you can always rely back to what here. You can always rely on this conceptual framework. So adaptability to business, changing business environments, improved accountability and transparency by providing a logical basis for accounting standards. A conceptual framework enhances the accountability and transparency of financial reporting. Companies are better able to justify their accounting policies and practices, which fosters trust among stakeholders. Educational tool, like myself, I really read this conceptual framework for purposes of transferring knowledge. The conceptual framework serves as an educational tool for accounting students, professionals, and other stakeholders. It helps them understand the underlying rationale behind accounting principles and how they are applied. Then we have here like the regulators, the Bankers Association of Kenya. All right. We have ISPAC as a regulatory body. Whenever they are looking at this oversight, then they must be making reference to what here, to this conceptual framework. Regulators and oversight bodies rely on the conceptual framework to evaluate the appropriateness of financial reporting practices and ensure compliance with accounting standards. It provides a basis for assessing the quality of financial information disclosed by by companies. Ladies and gentlemen, this concept that I'm talking about here is so popular in your exams. Very popular in your exams. Very popular. Very popular in your exams. I mean, this is very popular. Just a minute. Conceptual framework. Conceptual framework. Conceptual framework. Yeah. So you can see from this revision kit, and it's good that I've seen some of you have already started buying the revision kit. We have those offers for this revision kit. Now they are going for just 1,000 shillings. You need to have your own physical copy. So this revision kit, you can see from August 2023, question number 2C. August 2023, question number 2C, they asked for so many reasons. I mean, these are too many. Explain 6 reasons why it was important for the International Accounting Standards Board to develop a conceptual framework for financial reporting. So the role of the framework in financial reporting, the framework helps the ISB in development of other IFRSs and review of existing ones. Printing technology of regulations of financial reporting standards, the framework also assists here in developing national standards, application of IFRSs, auditors informing an opinion as to the true and the fair view of financial statements, users in interpreting the financial statements. It also helps users in interpreting the financial statements. We have here relevant stakeholders in formulation and development of what here IFRS. Ladies and gentlemen, you may forget about everything, but you can never forget the concept of what here how this conceptual framework is important to the accounting fraternity. Number one, we've said that this ISB body will be looking at this conceptual framework while developing what here new IFRSs. The ISB will be looking at this conceptual framework when they are revising IFRSs. Like now they were able to look around and they realized IFRS 4, insurance reporting, was not working. I mean, by looking, they saw IFRS 4 to be very inconsistent in terms of how it was being applied. And then they were able to strike it out. They said no to that one. They produced a very new IFRS what year? IFRS 17 for insurance companies reporting. All right. And we have seen several areas where they will come and say, I mean, like, for example, right now, IS1 has been abolished. All right. From 2027, we shall be having what we are calling IFRS what year 18, replacing IS1. Of course, they are saying 2027 is going to be mandatory for every organization to shift. All right. But remember, they always encourage early adoption. Like right now, those big companies are already looking for consultants to help them start applying this IFRS 18, which says that, for example, the income statement, you know, we have been doing like sales, cost of goods sold, we get gross profit, etc. You know, they're saying that way, you are not really disclosing what the users of these financial statements here need. So now they want us to be presenting this like if it's income statement using the cash flow concepts here, like how we have cash flow from operating activities, cash flow from finance. So expenses, for example, will be categorized like that in the income statement. It's going really to change things because since we were born, since those days we were doing business studies in high school, I mean, we've been having like if it's income statement the same way. All right. Now those things are being changed. Why did they bring out this kind of a change? It's because they would want transparency in financial what you're reporting. And of course, that must have been guided by what year? This conceptual framework. Conceptual framework all over is known for helping accountants in terms of what year interpretations. Conceptual framework, ladies and gentlemen, is the very best tool that you can use, you as the leader of accountants at your company, to train. These are the young accountants who are coming. Don't get young accountants who are coming in the company and then you're just giving them SAP number. Let them understand the principles of accounting. Let them understand what is the meaning of accruals. So that as you progress, they'll even be able to do what you to challenge you. So at the end of the day, this conceptual framework will be able to aid those things like comparability, transparency, consistency. Once you have that broad knowledge, I'm so sure there is no question on a conceptual framework that you will not be able to answer in your exam. And if you allow me, I'll be able to go to the next area as per our agenda. As per our agenda, ladies and gentlemen, the next area is basically the process of developing these IFRSs. How do we develop new IFRSs? We as ISB, now we take ourselves as we are the ISB. We are the board, which is making what here? The IFRS standards. The process for developing new international financial reporting standards, IFRSs. The International Accounting Standards Board, ISB, follows a rigorous and transparent process for developing new international financial reporting standards. Here is an overview of the typical steps involved in this process. The first thing they have to do, like we have done in our today's class, is to set the agenda. So we have agenda setting. The ISB identifies and prioritizes topics for standard setting based on input from stakeholders, including investors. Like now the insurance investors were not very happy with the reports they were getting from the insurance companies, which prepared the financial reports using IFRS 4. Preparers, auditors, regulators, and other interested parties. This may involve consultation surveys and outreach efforts to gather feedback on emerging issues and areas requiring water standardization. So, ladies and gentlemen, the body called ISB, these guys will sit down. They always call for memoranda from like bodies like ISPAC, like ACCA, all right, asking for any emerging issues that you would want us to address and have like a standard. So these guys here, whenever they meet, they will review. I mean, I can see there are so many guys who are talking about digital assets, Bitcoins, etc. So then we need a standard here. So we have to sit down and set the agenda. All right. So once we have set an agenda, we've said in this case here now we need to start looking at a new standard on digital assets. So it's an agenda which has to be circulated widely to all these accounting bodies globally. You distribute this so that you can now start getting even opinions. You form a task force now that you have an agenda. Look for a budget, because now once it's an agenda, now it's about execution. You need also a budget, right? Ladies and gentlemen, agenda setting. The ISB, I'm repeating again here, identifies, prioritizes topics for standard setting based on input from stakeholders, including investors, preparers, auditors, regulators, and other interested parties. All right. And then number 2, we have here research and discussion papers. Now they have been able to set an agenda. They've agreed that for sure we need something. We need a new standard on this area. Now they engage experts to carry out research on their behalf. So research and discussion papers. Once a topic is selected, the ISB conducts research to understand the underlying issues and the challenges. It may publish discussion papers or research papers to explore different perspectives, solicit input from stakeholders, and assess the feasibility and the potential impact of proposed changes. Ladies and gentlemen, in this case here, if you go to the ISB board today, if you go to ISB's website today, you'll get so many discussion papers, which of course they are hanging up there. All right. So those discussion papers, of course, they are calling upon members, anybody, including yourself, even as a student. You're allowed to go there and give your opinion, all right? Those opinions, in this case, will really help ISB as they carry out their research, because there is no man who really knows it all. We need each other to be able to move to the next level. All right. So you're saying the second step is number one, select a topic. This topic you're selecting is your agenda. And then number two, ladies and gentlemen, now be serious, start doing research. And how do you do this research? You will have to publish like a discussion paper. So you're going to get a lot of input from people. You have your technical team. The technical team goes through these inputs here, and then it automatically comes with now what we call quite a rough draft that we shall call an exposure draft. So this exposure draft is basically the very initial, the archaic raw standard. So this exposure draft is what we're giving to the whole world now. Tell the whole world that, remember we had set an agenda. We had set a topic here. It's IFRS 17. Now we have done our research, and this is what we think IFRS 17 should be talking about. We expose that content to the whole world. Again, give the whole world a window of say a month or two. They look at the exposure draft, and then they'll be able to poke holes all over. Here there is a problem. Here this is we don't understand. We don't do this and this. Through poking holes, you shall be able to refine this standard further. So you're saying, ladies and gentlemen, here, research and discussion papers, that's okay. So from there, we have what we call development of an ED. They call it ED, exposure draft. Based on the findings from research and consultations, the ISB develops an exposure draft outlining the proposed changes to existing standards or the introduction of new standards. The exposure draft includes specific proposals, rationale, illustrative examples, and draft language for the proposed amendments. The most important thing, ladies and gentlemen, we have been able to get some findings here. All right. All right. So in this case, the findings we get, we shall be able to craft what we call an initial draft, an exposure draft. This exposure draft now shall be taken to what we call public participation. The exposure draft. So public participation or consultation, the exposure draft is released for public comment, typically for a period of several months. Interested parties like ISPAC, like ACCA, including accounting professionals, standard setting bodies, academics like universities, and the general public are invited to provide feedback on the proposed changes. The ISB actively encourages stakeholders to submit comments and participate in outreach activities during this stage. 5, analysis of feedback. The ISB carefully considers all comments received during the public consultation period. It analyzes the feedback, identifies the common themes, and assesses the potential implications of suggested changes. This process may involve additional research, discussions with stakeholders, and deliberations within the board. Now, from there we go to this, where now we talk between ourselves as the technical team at the ISB, deliberation and re-deliberations. Based on the feedback received, the ISB deliberates on the proposed amendments, taking into account various perspectives, technical considerations, and the objective of improving financial reporting quality. This may involve multiple rounds of discussions and revisions to address concerns raised by stakeholders and ensure the proposed standards are robust and practical. Approval and publication. Once the board is satisfied with the proposed amendments, it votes to approve the final standard or amendment. They also vote And here it's majority that will take the day. So the approved standard is then published along with a basis for conclusions document that provides insights into the board's decision-making process, responses to significant comments received, and explanations of key provisions. And then, of course, they will talk about the effective date. Like I've just told you, IFRS 18 is from 1st of January 2027. And of course, they will leave what we call transition. The ISB specifies the effective date of the new standard and establishes transition requirements for entities to adopt the changes. Depending on the nature of the amendments, the transition provisions may vary to provide sufficient time for implementation and minimize disruptions. Then we have, of course, monitoring and evaluation, post-implementation review. After the new standard is implemented, the ISB conducts post-implementation reviews to assess its effectiveness, identify, like they gave us IFRS 4, it was a pretty new standard, IFRS 4, but within no time, they were squashing it, saying this is now useless. Now we have a better version. So now they gave us IFRS what year 17. They would have not known that IFRS 4 was not effective if there wasn't any monitoring and what year evaluation. Ladies and gentlemen, remember you're not supposed to cram those steps. But there are key steps that you're always supposed to remember. The key steps. Like number one is very, very important. Agenda setting, topic formulation. After that, ladies and gentlemen, of course, we expect this particular body called what year? IASB. Now to sit down and start doing lots of research, lots of discussion paper writing. After that, of course, they shall be able, ladies and gentlemen, to also, seek for advice. All right. And then they shall be able to sit down and now come up with an ED, exposure draft. This exposure draft is what will be hung on the website of what year? ISB board, for us to get inputs from various stakeholders. Once we get this exposure draft, ladies and gentlemen, we have to really do a lot of consultations amongst ourselves, deliberate amongst ourselves here, talk quite a lot. After that, ladies and gentlemen, of course, we expect you now to release, in this case here, this standard, which of course will go through what year? Some process of approvals within. We vote. Now, once we release this standard, of course, there shall be a process of what year you have to tell people, you must give another document. How do you transition? Like a guideline, all right? And there will always be what we call monitoring and what year? Evaluation, monitoring and evaluation. So I don't want you to cram, just to have a bigger overview. And then you'll be able to put this in your own what year, in your own words. Of course, that makes sense. That makes sense. And this is very popular. I just have to go to the revision kit and show you. Very popular. The process of development. Very popular, I'm telling you. And without knowing these theories of AFR, regardless of how sharp will be in terms of number crunching, you will never pass. AFR theories are very, very important. I take time with them. So like here, April 2023, question number 4C. April 2023, question number 4C. Question number 4C. The sole mandate and responsibility for issuing international financial reporting standards lies with the International Accounting Standards Board, ISB, the board, which in conjunction with other regulatory bodies such as the IFRS Foundation the IFRS Advisory Council, and the IFRIC ensure the development of global accounting standards of high quality required. In view of the above statement, briefly describe the procedure for the development of an IFRS standard. Briefly. So of course, like number one, the board identifies the subject and appoints an advisory committee to advise on the issues. So they set an agenda and then have an advisory committee. The board then issues a discussion paper and avails it for discussions and the comments from key stakeholders. After review of the comments on the discussion paper, the board publishes an ED, exposure draft, which is a draft version of the intended standard. Following the consideration of comments received on the exposure draft, the board publishes the final text of the IFRS standard. The published IFRS standard is issued for interpretation through guidance of International Financial Reporting Interpretations Committee, IFRIC. At each stage of the standard setting process, an approval by way of vote by at least a simple majority of board members is what is required. I told you it's not about cramming, it's about having a general understanding, and then of course you can put down this concept in your own way. So is that clear, ladies and gentlemen? Can I take on the next item? Are we together? Are we together? Are we together? Are we together? You guys following? All right. All right. Thank you very much. Great. So then I should be able to take in this case here, like, not that one. Our second last agenda is about something that is very close to my heart here. Yes, the Capital Markets Authority, CMA, corporate governance reporting requirements. Ladies and gentlemen, of course, you know that Capital Markets Authority is the regulator of listed companies in Kenya. Any company that is looking at raising capital from the public must fall under the purview of CMA, the Capital Markets Authority. So Capital Markets Authority, given that it is the authority, it is the regulator up there, it has got its own corporate governance reporting requirements. If I may talk slightly about corporate governance, remember corporate governance gives us the way through which companies are directed and controlled. How do you direct a company? So it basically talks about like the whole governance. It talks about like the whole management. Of course, serious companies must always have must always have the board at the apex there. This board, according to CMA, it must be balanced. A balanced board is not like a balance between men and women. Like if you have 5 men, then you must have 5 women. No. Balanced board, we're looking at a balance between independent and executive, or rather executive and non-executive. So assuming we have got 4 executive, the ones who are basically running the company every other day, to match them, we need a minimum of 4 non-executive. Those guys who don't work here, they're coming from out there with different great experiences. So they come and like guide these 4 guys here. So if the board is an odd number board, if you have got 4 executive, then in this case here 5, majority will be non-executive. All right, majority will be non-executive. But if it's even, then it should be balanced purely. But remember, boards, we prefer odd numbers because of the voting. All right, so we're looking at a situation where governance, we must have a board. And this board, ladies and gentlemen, according to CMA, it has to be all-inclusive as much as possible. Exercise inclusivity. So inclusivity, we said yesterday, ensure that, for example, yes, you have in this case here, men, women there are members of the community who are disabled, all right? You should never have like a homogeneous, if you want the board that is running this company to be progressive, let this board be what here, an inclusive board. Have younger people there. You know, ladies and gentlemen, there is quite a whole difference a whole difference between us and these young people. Like currently, I'm teaching high school. Of course, we introduced a section for RCM where we are taking through these kids, these holiday tuitions, and we're doing very well there. All right. So I was trying to teach them like a half plus 2/3. And I was going through along. Then they told me, Mwalimu, no. I mean, that's when it ticked on me that we're becoming old. All right. That you can have these young people, and their method is much better. You can't even compare. All right. So things are changing. And because we have these particular companies here to serve the whole world here, my consumers, of course, my consumers, I'll get elderly people. It's also a mixed group. And that is where the board should be able to reflect here, have some people who are young, have in this case a different gender. Somebody should not come in this case here, for so long as they have got qualifications. So they have Rasta men, and then you are sucking them. No. You are discriminating people, for example, on HIV status. No. We have to exercise a very inclusive model. Inclusivity. All right. Ladies and gentlemen, so we have addressed this concept of balance through inclusivity. Then we have this board, especially the chairman, should never be the CEO of the company. The chairman's role ends at the board level. It's only in Africa where you will hear like a chairman has got an office in the company. Chairman, they're supposed to be non-executive, and they're not supposed to be mouthpieces of companies. Lakini hapa Kenya unapata sawa aduni chairman wa IBC. Ati anajulikana hapa. Chairman anafaa kujulikana. Mtu anafaa kujulikana sana ni CEO. Just for example, right now, good companies on the context of corporate governance, you can't know, like now, who is the CEO of Equity Bank? Who is the CEO of Equity Bank? Who is the CEO of Equity Bank? Do we know the CEO of Equity Bank? Who is the CEO of Equity Bank? Who is the CEO of Equity Bank? It is James Mwangi, isn't it? But is there anybody who knows the chairman of Equity Bank? Is there somebody who knows the chairman of Equity Bank? Chances are very few of us will know the chairman. And that is what corporate governance is supposed to be. Corporate governance is about checks and whatever. So the CEO and the chairman roles should be held by two different people. And we should never have like the chairman having an unchecked power. Because remember, all of us in one way or the other, we are greedy. We are greedy. And that is why you'll get students saying that that particular governor is a thief, is trust you meets because you have not gotten an opportunity. Most of us, if we got that kind of an opportunity, will do worse. And that is why whenever you go to these companies, we need you to be checked from the word go. Otherwise, if you're not checked, if you are very, very powerful, you'll override all internal controls, and then you'll have, in this case, everything by yourself. So do want checks and balances. So in this case, the Capital Markets Authority is very, very clear. The CEO and the chairman roles are supposed to be separate, and you as the chairman, stop moving all around, in this case here, scaring. No. Your role is at the board level. You should be able to ensure that the board members are talking here. They are, in this case here, discussing the agenda items, right? And ensure that the resolutions of the board are being, in this case here, followed through in implementation, so that when you come to the subsequent meeting, you as the chairman, a wise chairman, and we have got very few wise chairmen in this country, very few. I've attended several board meetings, and I can tell. Because when you go to a meeting, you as the chairman, and of course you have your company secretary here, the first thing is to have a last meeting minutes reviewed, all right? And you should be able to have like a clear way of ensuring that every discussion is captured down through a good company secretary. So when you come down, of course, you were given an agenda, you discussed, they became resolutions. So in this case, you hand down this to the CEO. Of course, CEO is part and parcel of what here? The board. So in the subsequent meeting, then you must ensure that the board really is tough on the CEO in terms of implementation. And how do you do that? By reviewing the previous meeting minutes. Has this been done? No. Has this been done? Yes. This has been done. Where are we? Like that. So basically, you are tracking, it's monitoring and what evaluation. All right. And remember, a good chairman, you don't go and take over. all the board's discussions. Yours basically is very, very easy. You need to be very wise. I mean, give guys like say 10 minutes and we must indicate there. This particular agenda item, 10 minutes. They discuss. Everybody, even the ones who are conservative, always point at them. What do you feel, Mr. So-and-so? All right? Because these conservative people, again, they're also very bright. Give them a chance because you must give people fair chances, like how the speaker in parliament does it, right? And then, ladies and gentlemen, once in this case, everything is taken over, have a vote happening, and then after the meeting, please move away from the company. Leave the CEO, in this case, who is now charged with the day-to-day operations of the company, to run the company. Then you get report, your company will be able to go very far. So you don't want a situation where the chairman of the board is again the CEO of the company. No, those are supposed to be held by two different individuals. Now, ladies and gentlemen, then, this is very important. Please listen. Listen here. Please listen here. The Capital Markets Authority, like other regulatory bodies in the various jurisdictions, typically imposes corporate governance reporting requirements on companies listed on the stock exchange or involved in public offerings. These requirements aim to enhance the transparency, accountability, and investor confidence in the capital markets. While specific reporting requirements may vary from one jurisdiction to another, here are some common elements often included in corporate governance reporting, so board composition and structure. Companies are typically required to disclose information about the composition and the structure of their board of directors. And I showed you from yesterday's PDF document about EABL's board composition, like that lady told you, right? The chairman there, all right? So in this case, you have to tell us, including what are the committees. Yeah, like audit committee must be there according to CMA requirements, the remuneration committee, etc. Ladies and gentlemen, according to CMA, director independence is very, very key. You must disclose your independent directors. And of course, in this case here, try to prove to us that for sure, these guys are what independent, but they have never been our suppliers. They have never been our employees. We did in this case here through this a fair what year, nomination of what year, our independent directors, remuneration practice, especially for the directors. This thing of having that's why I told you there are very, very few wise chairmen in our country running boards here. You'll get like a chairman. The first thing, I'm normally taken aback. The first agenda item when you meet, in this case as a board, people raise like, we would want to get 50,000 Kenya shillings per sitting. And then as a chairman, you are really, supporting that. No. You want us to raise this thing from 10,000 to 50,000. All right. Most of you are even coming and attending these board meetings for an hour. You simply come to put in a signature for that board allowance. Right? There's no problem. If the company can, of course, afford, well and good. But you're getting 50,000 for staying with us for, say, 2 hours, and some employees are not getting even 20,000 a salary. That's unfair. All right. So as a chairman, you should be at the forefront in terms of championing the interests of the company. As much as you would want to get, this money will never be enough. This money will never be enough. Normally, what I tell my students in terms of ethics, we're going to cover ethics down here. Ethics, ladies and gentlemen, this money will never ever be enough. And it doesn't matter what you do. It doesn't matter what you do. Look at, for example, some of our rich people that we have around. If you've ever been to Karen, near the defense forces around there, you'll be able to see, like, for example, Tuju's home in Karen there, back, right inside the forest. Big, huge, like a white, like state house. White in color, huge, massive. I'm sorry to say this, lakini mama anawacha yeye, anaenda na soja. So at the end of the day, it's not really like chasing money. No, we are on earth to make some contributions here. All right. We as accountants, of course, would want to create wealth for companies and the individuals here. This thing of being greedy, I'm really against it as my students, because I don't normally read. You'll go and hear after 2-3 years, that fella is in the prison because of stealing some money from this company. No. even if you have a very, very big vehicle, and I have a small one at Toyota, at the end of the day, it's about just time. I don't even reach same time. All right. So in terms of integrity, so in this case here, never have individuals who have got too much powers, because people outside here, we are really drunk. We would want, in this case here, a lot of, because we would want to show. And God has got a way of really equalizing us. We get another rich guy, takes their kids, in this case, to these heavy schools, big schools, say McKinney. So they do their grade 8. So this guy, who has been paying fees of 500,000 per term at times, right? The kid gets 356 marks. Another fella here has gone to Kibera Olympic. That kid comes with 415. I'm not saying that we become poor, but let us be genuine in our operations here. Let's work very hard and let's be genuine in our operations. All right. So remuneration practices, ladies and gentlemen, here, reporting requirements often extend to executive compensation practices. Companies need to disclose details about the remuneration policies, including the structure of this board compensation. They must be pegged on performance. If you are the chairman, try to ensure that directors there are really working. They're coming up with strategies. They are there to help, in this case, your CEO run the company effectively, right? They're advising the CEO, of course, here. Risk management, in this case, your CMA, of course, wants companies to manage risks. So risk management and internal controls. Companies may be required to provide information about their risk management practices and the effectiveness of their internal control systems. This may include disclosures related to identification and management of key. You will basically need a risk framework, internal audit processes, and any material weaknesses in internal water control, internal controls. Ladies and gentlemen, remember, internal controls are supposed to be the umbrella. The umbrella is supposed to protect these companies from being rained on. Because there are so many guys who are just, and I told you yesterday, you will get, ladies and gentlemen, I don't know what is happening. Go to these big hotels today. As early as now, there are guys who are seated there, they're simply discussing like, which institution today do we go and rob? And they're robbing massively. You can now see the fertilizer scandal, all right? So there are guys who are really willing. So you need like very strong internal control systems. And remember, internal control system, for them to be strong, you must always remember the acronym ASTOP. ASTOP. We can only say that your internal controls are strong if A, for ASTOP, we are able to get accurate financial statements. S, companies' assets are safeguarded. T, we are able to get reports on a timely basis. O, there is order in the company. P, prevention of fraud and what year errors. Otherwise, if any of them is missing, then you have a big hole in your umbrella. And I can assure you, there are guys who don't, whenever they get an opportunity, they can, broad daylight. Like, fertilizers. Imagine people moving around in gun bags here, selling what here? Selling sand. And they're not selling sand in this case to stupid people. Most of these farmers know exactly. They've been dealing with these fertilizers for long. But people are not that good, which is very wrong. Of course, we have very good people, but most of us, we simply wait for opportunities. And that is what CMA wants you to do. You report on your internal control systems. Because if the internal control systems are not working, people will still, like now there's a time, the Kenya Railway, something happened, and then the Kenya Railway was not able to pay workers, etc. People were even approaching the railway line. You can imagine what kind of wanton theft is that. All right. So in this case here, CMA needs you guys to report on the risk frameworks you're using, how strong is your internal control systems. And we know that the biggest internal control system is the internal audit committee. Not internal audit committee, but the internal auditors. Every organization needs an internal auditor, All right, ladies and gentlemen. Then, of course, CMA is big on shareholder rights. They would want you to carry out an AGM, annual general meeting. And in this case here, shareholders must be able to vote for the directors. And once, ladies and gentlemen, the director say we don't want you, CMA is normally very happy with that. There's no way, even if you go to court. Reporting requirements typically cover shareholder rights and engagement. Companies will need to disclose information about the rights of shareholders, voting procedures, and any material transactions involving related parties. I'll be able to describe what this is. It's a subtopic in topic 4. Then we have stakeholder engagement. They always talk about public participation. Some regulatory frameworks require companies to report on their engagement with various stakeholders, including employees, customers, suppliers, etc. Then we have what we call ethical standards and the corporate social responsibility. CMA needs companies, ladies and gentlemen, to have what we call CSR initiatives here. CSR initiatives here. It's very, very important that you get to know that as a company, you are also a social enterprise. Don't tell me that we are a profit enterprise 100%. If you're not social, you're not having, in this case here, a key pillar of people, you will be able to die as a company very soon. Why? Because this surrounding community, those guys will gang up and they say, we don't want you. And I've seen that. There are cases we solve. Like, for example, at along this Namanga in Kajiado. I mean, there are people that, although nowadays not very bad, also in Lodwar, where people will come and they say, this is tallow oil, and you guys today will not deliver oil anywhere, and there are no raw materials coming here. And those young men picket like three weeks. Nothing is happening. No production. Look at the cost. What if, for example, it's simply for longevity? You are looking at these very people and saying, ladies and gentlemen, these people are getting children. They need a primary school. Just put a simple primary school structure there. Put a borehole there. All right. Give that project to the community. Let them run. But of course, you are also looking by the side. So that project again is not you're looking by the side here. If there is anything they want, you keep on supporting. If it's employment, you must be able to employ members of this local community. Don't look down on them whenever it comes to employment. Have what we call affirmative actions. I mean, even if they are not landed at all, there must be something that they can do here. Don't bring people from outside 100% and then you expect things to be good. CMA needs sustainability. It will tell you, in this case, you have CSRs and you have to report on them. All right. So whenever it comes, ladies and gentlemen, to this Capital Markets Authority, there are those things that are supposed always to remember, especially they're interested in the board, the composition. They're interested in this case here, that concept of independence of directors. All right, especially the non-executive ones. These guys are so big in terms of what here, they are so big in terms of the shareholder rights. That's why you'll even see, for example, like when they're giving you the financial statements, they even go ahead to tell you that you can vote by proxy. And they want you to appoint your proxies. All right, you as a shareholder, so you have every right. That is why when you appoint some AG, or when you go to AGM, you will get, for example, when things are so heated up, some shareholders are even jumping on top of tables and they're making a lot of noise, but you can't do anything, right? Because those guys have a right. Actually, if you go ahead in this case to disperse a meeting of shareholders here using policemen, that is really, really bad. Let those guys get an opportunity to ventilate. So long as they don't go physical, let them get an opportunity to ventilate. And of course, it's very clear, if they don't want any directors, then they'll be able to vote against you, you disappear. And then CMA is so big in terms of what your stakeholder engagement. Stakeholder engagement. Please don't forget, this is popular in your exams. Stakeholder engagement, they want what we call public participation. Public participation. Public participation. Public participation. And remember, even our body politics. Basically, this is what we wanted to happen when we were saying, for example, ministers should not be doing politics. All right. These are supposed to be like, ministers are supposed to be like the CEOs, right? They're supposed to be, these are the technical ones. They're supposed to be doing quite a lot from inside here. And then I will leave the other things about like government spokesman, like the president, etc. So we'll need a lot of what here independent, public participation like that. So if, for example, you introduce like, and I don't know how this thing went, Dr. Lotto is a genius. I don't know how this thing went. Like you come and introduce like this affordable housing, and you never involved the public in how it was crafted. Then the court in this case will come and put that thing down. because there was no public participation. But this case was taken to court. I don't know nowadays whether judges are not as quick as they used to be. This affordable housing, because I mean, it's something we expected to be quashed, right? Because most of the stakeholders who went to give opinions gave opinions in the contrary of what the state wanted. All right, but we shall overcome. We shall overcome. Ladies and gentlemen, if you allow me, I'll be able to move the next concept here, which now happens to be the very last. Yeah, they're also big on this ethics, very, very important. Yeah, disclosure of related parties is also very, very important. CMA wants us to disclose related parties. As I said, I'll be discussing this later on, but companies are often required to disclose any material transactions with related parties, including directors, officers, and significant shareholders. This ensures transparency and helps mitigate conflicts of what here. Remember, as I will be telling you, ladies and gentlemen, related parties, for example, key staff, the key management staff are related parties to the entity. If we have a parent company, maybe we are a subsidiary, if we have a parent company on top of us, that is our related party. And any business that you do with the related parties has to be disclosed. Remember, when you talk of key management staff, also their family. So for example, if I'm a key management staff at RCM and I have a wife, if my wife, for example, comes to my college and studies here, I have to disclose that. Why? Because chances are, these guys, you may start bringing in relatives, in this case, without paying fees. Then the longevity of that company will not be there. Remember, it is related parties that normally kill businesses, that kill businesses. All right, ladies and gentlemen, then we have in this case here, the last section. These others are too many. You guys will be able to read after all I've given you. Now, legal and ethical issues in financial reporting. Legal and ethical issues in financial reporting. Ladies and gentlemen, remember, most people are not very ethical whenever it comes to financial reporting, including you guys who are here. And I can see you, and I know even at the workplace, most of you are not very ethical. That is why you get, for example, you guys advising your employers to have like 2 payrolls. There's one payroll which is under the table that will never be seen. Another payroll. That's unethical. And you can't go very far away with this eating stink. All right. And then we have, of course, the issues to do with creative accounting. Oh, we are ethical. Great. So creative accounting. So creative accounting, of course, you're creating profits. Your window dressing, and I gave you an example like yesterday, like now I would be having a very good curtain here, window dressing. I'm just dressing the window so that you cannot see what is inside. So many accountants, like I know you guys are preparing 2 sets of financial statements. There is a set which goes to the banks for purpose of borrowing loans. That one shows, in this case here, revenue, madogo, costs kidogo. Ndio bank ikiona nasema loan. And then there is that set of financial statements that goes to KRA, which shows revenue incomplete. Do. Cost mean. So every time you are disclosing what you law, creative accounting. Also accountants, the other unethical behavior, which is also illegal, that they engage in often is called insider trading. Insider trading involves you getting, of course, you guys you are at a privileged position. So at times, in this case, you may get to know like what profit will be posted at the end of the year. And once in this case, you know that the profit at the end of the year, for example, will double, then what do you do today? You go to the capital markets, you go to Nairobi Stock Exchange, you start buying your own company shares because you know something will happen. When the profits are announced like this, the share price goes up, you go and sell all those shares. That's what we call trading from inside. Insider trading. Insider trading. It's also illegal, it's unethical. Now, so legal and ethical issues in financial reporting are critical considerations that impact the integrity, transparency, and trustworthiness of financial information provided by companies. Legal issues. Non-compliance with accounting standard is illegal. Failure to adhere to established accounting standards and regulatory requirements, such as the GARPs or international financial reporting standards, can lead to legal repercussions and sanctions from regulatory bodies. And we have seen, especially like this concept of CMC, where like the auditors were not able to follow the ISA's, International Standards on Auditing, right? And of course, in this case here, we had the auditor being, in this case here, made sanctioned, and they was really fined, right? So when you don't comply with accounting stock auditing standards, that is illegal. One of these fine days, you may get yourself in court, all right? You know, people take this thing very lightly. Litigation is simply just no. We have to follow the law. Those IFRSs are like our law. They are like our constitution. Misrepresentation and fraud. Deliberate misrepresentation of financial information, such as inflating revenues or understating expenses, constitutes fraud and may result in civil or criminal liabilities. Insider trading, unauthorized trading of a company's securities based on material, non-public information. The information is not yet public. Non-public information violates securities laws and insider trading regulations. Individuals engaged in insider trading may face severe legal consequences. And this also applies to your family. So for example, if I'm the CEO of Safaricom, of course, in this case here, most of the times I will be discussing about Safaricom with my wife. Although there are levels once you reach, you should not trust people so much. People can really mess you. All right. So you go and tell my dear wife, this time around Safaricom will really, positively profit. And then the wife, of course, wives, we love you so much. But at the end of the day, we know that you normally have secret assets. We know that you have secret assets. Like here, there must be somebody's wife who has a land that the husband does not know anything about. True or false? Now, Pamela, answer that. True or false? True or false? Answer that. Yeah. It happens, yes. It happens. And if you ask them why, they'll give you very good reasons. Some of them owns the apartment and the husband is renting it. You see. Now, ladies and gentlemen, this lady goes and buys now Safaricom's shares and sells them immediately after the information about how well Safaricom is doing gets public. You will be fired. You as a CEO. You'll be fired. You can't come and tell us that the wife bought rich and I never gave her any information. No. And that is why it's very, very clear. You tell this lady of yours that given now my position, given insider trading, please, even if I've not told you anything, please never buy shares of Safaricom. Never buy. If you want other shares, let's buy shares from other companies, but not from Safaricom. And then we shall overcome. We shall overcome. So disclosure requirements, there are things you must disclose. If you don't disclose, then of course you make everything misleading and you're going to be charged in a court of law. But of course, ethical issues, we are looking at integrity and honesty. We as accountants are supposed to be straightforward people. And that is why at times I sympathize with accountants. You'll get like, there was a company I was in. The accountant was not really professional. This guy, in this case here, was always saying that, things are looking well. Trying in this case here to please tell directors the way things are. Your role is to perform. When things are going down, actually go and use Excel, Power BI, show these people that, things, so that they cannot make decisions. Your role is not to make anybody happy. You are not a people pleaser. You are telling people the truth. If, ladies and gentlemen, in this case here, you are not a honest person, then trust me, you are not meant to be an accountant. You should be able to look for your profession. Maybe you should have been a tailor. You know, most of these tailors are Kora. Maybe you should have been a tailor and not an accountant. You. So financial professionals, including accountants, auditors, and executives, are expected to uphold the high ethical standards of integrity and honesty in preparing, presenting, and disclosing financial information. Ethical lapses such as falsifying records or engaging in deceptive practices undermine trust in the financial reporting process. Conflict of interest, again, just like insider trading, conflicts of interest arise when individuals and entities have competing interests that may compromise their objectivity and independence in financial reporting. Addressing conflicts of interest requires transparency. You must be able to disclosure and adherence to ethical principles with priorities that prioritizes the interest of stakeholders. Remember, at the end of the day, it's about the company, it's about stakeholders. We should be able to subordinate our individual interests. Fair presentation, financial reports should fairly represent the financial position, performance, and the cash flows, etc. Professional judgment. So, ladies and gentlemen, whenever we talk about ethics, ethical standards, there are things I would always want you to remember. We have an ethical standard of confidentiality. You shall always try as much as possible not to disclose whatever you come across to third parties without the consent of your managers. Confidentiality. We have an ethical standard on integrity. We have to be straightforward. We have an ethical standard on objectivity. Objectivity. Know that you have many stakeholders and you have to be fair to all stakeholders. Don't be the one who denies KRA money. That's an important stakeholder. Why are you denying them money? If you do like that, that's unethical. You must be very objective. Your pendulum should be able to go to whichever water side, depending on where truthfulness is. Then we have the concept of professional competence and due care. So under professional competence ethical standard, you as an accountant, you should be able to know that you're going to become a lifelong learner. A lifelong learner. Hata ile siku utakuwa kashosho, umelala utakuwa unaendelea kusoma. Otherwise you'll be incompetent, and if you're incompetent, you'll not be able to serve your clients very well. So learning for us is lifetime. That is why even ISPAC has got what we call CPD, continuous professional development throughout. All right, because if you are not competent, then you'll not be able to take due care to your customers here. All right, you don't be able to care for your customers here. So somebody is supposed to be paying tax of this much, not because you're not competent. You're paying that you are telling them to pay 20 million up there. One day you'll be taken to court. And then lastly, under ethics, ladies and gentlemen, there is what we call professional behavior. How we carry ourselves outside here should be able to add credibility to our member body called ISPAC. We don't want situations where you, like there was this case of a member of somebody, an accountancy body are not named because I'm a member of that body. So this guy went and had one for the road. I think one became too many. So he was wearing that tag, assuming it's a tag of ISPAC, a tag of ACCA, right? This guy was wearing that tag showing that we are a member of this body. So and this guy was not trying in this case here to go zigzag way to his home. Unfortunately, he fell down. It was during the rainy season. The guy slept in that particular area until the morning, and he was so, by the time he was almost dying. So the media people came and captured this guy. And it was heavily circulated because of the tag. So of course, this was putting the body into disrepute. So it was now a disciplinary case. And over 99.999% of the members sided with this Mlevi guy. They say that Mlevi ana shida alikuwa anakula chakula yake. That it should not be, in this case, removed from the register. You know, once you remove from the register, then you can't even, in this case, assign audited reports. But honestly, whatever this gentleman was doing, do you think that is behaving professionally? So people say that professional misbehavior is about stealing, etc. That's when you will say that you are, discrediting the profession. No. To me, if you ask me, ladies and gentlemen, even if you are taking one for the road, an accountant, you are supposed to always be in control. If you're not in control, leave that situation. The moment you start overdoing things, again, I go back to this example of somebody, you've gone in this case to a club and you're jumping up on top of tables here to dance, and you are a member of this park. To me, that is really, really dangerous. You Yeah, so that is why as an accountant, you really need to look at also the environment you go to. So gentlemen, it has been a pleasure hosting you this morning. I look forward to meeting you again on Sunday. Remember, next class is on Sunday at 2 p.m. At 2 p.m. This handout I've shared with you. So I don't know whether there is any handout that I owe you, which I should be able to send. During the day, it's quite hard to get me, but like now you should be able to tell me like a few minutes, you have this. Like, do you have all past papers? Okay. Okay, great. Those ones I'll be able to organize and send them to you right away. Otherwise, bye. Good day. Go outside there and put your very best as you work. Thank you.